Joining us today is our Chief Investments Officer, Riaan Van der Vyver, to discuss multifamily assets. Hello, Riaan.
Hello, Gabriella. Morning. How are you?
Good morning. I'm well, thank you.
That's good news.
Riaan, I wanted to ask you a bit more about a new asset or an asset that is currently available on our marketplaces, just to understand it a bit more from your perspective as the Chief Investments Officer. And that asset in particular is multifamily. Can you first just tell us a bit more about what multifamily is?
Yeah, certainly. Maybe I'll just start by what is a single family property. And, you would say it's a no-brainer, but a single family property is simply, it's a single unit like a house that you can buy to rent out. Whereas multifamily is where you've got an entire block of apartments, for example. And one of the big benefits is that one entire block of apartments, i.e., let's say 200 or 300 units, have only one title deed. So it's not that you are needing to work or that you've got challenges due to 200 or 300 different title deeds. So that's one of the big benefits of multifamily, is a single title deed. So think of it as a duplex complex, an apartment building, a townhouse complex, a condo complex, so it's basically, it's multiple units put together into one block.
Okay, that makes a lot more sense. Now, why is multifamily an asset that is a part of the investment thesis for your team? What are some of the reasons why it might be an attractive asset to invest in for our investor community?
Yes, thanks. I think the biggest thing is for investors. Investors do not like uncertainty. And with multifamily, since it is residential, you've got this predictability of returns. And how do we achieve predictability of returns? Through monthly rentals. So our approach typically is to rather identify opportunities for our community where it is an established building with a high occupancy, where there is established rental streams. So the first thing is that predictability. The second thing is, if you stay there, you need to pay your rent monthly. So it's a passive income stream for our community. Another important thing is that tenant risk is mitigated. If you have a building with 168 apartments, if one of those tenants move out or default on their monthly rent, it is one out of many. Whereas as an investor, you go and you buy, let's say, a flat in the UK, then you carry that one single tenant risk. Whereas with multifamily, you've got this diversification. And also, I think what is quite important is that with a block like multifamily, you've got a professional property manager, and they've got a tenant management strategy where they know when rentals will expire. They start engaging with that tenant, or they try and find new tenants. So in other words, they manage it to get a very high, or to maintain a very high occupancy rate. Then I think also, which should be quite clear, is that, accommodation is a basic need. We all learned at school about the hierarchy of needs, and accommodation is a basic need. What that then means is that residential or multifamily is the biggest and the most liquid real estate subsector that's available to investors. And then I also think is, if you look at the COVID-19 pandemic, when you have an economic downturn or an economic shock or uncertainty, it's a very good risk management asset class, because people still need to live in their houses or in their apartments. So in other words, they still continue to pay their monthly rent. Whereas with the other asset classes, there could be a risk of higher vacancies. So from a risk management perspective and a diversification perspective, multifamily is a very attractive asset class. And then lastly, you get economies of scale, because with 200 to 300 units, you appoint one property manager. So in other words, you'll bring your cost down per unit, and that means increased returns for investors.
Okay. So when you are looking to invest in a multifamily, what are some of the characteristics or traits maybe that you are identifying in a property as a potential opportunistic or ideal multifamily asset to invest in?
Yes, yeah, thank you. A good question. So the first thing is there must be a value add opportunity. So what we mean by that is through renovation or repositioning of that apartment block or the multifamily property, there is the potential to either increase rentals or to have an underpin of capital growth. The second key thing that we look at is what is the occupancy and what is the stability in occupancy. Now, typically, the sponsors we use like to work on a 5% vacancy rate, whereas the property that we currently have on platform, for example, sits at 97. So in other words, they do not go and they're not over aggressive in terms of their vacancy rate. So where they might do an assumption at a vacancy rate, let's say of 5%, the actual experience is closer to 2.5%. Okay. A further important point is that there must be rental underpins. So in other words, there must be some sort of fundamental factor that will drive rental increases in that property. And what could that be? It could be, for example, that the potential to build another apartment blocks, that potential is very low. So in other words, supply, new apartments coming online that probability is very low. Or for example, we're buying, let's say, a B-class property, that's an older property that's been renovated. So in other words, it had a facelift, it's modern, it's new, but more luxurious apartments or multifamily blocks that's being constructed in the area demand higher rentals. So in other words, automatically we can offer, or the sponsor can offer, a property at a lower rent, which then means it becomes more attractive. And then lastly, we look at economic factors. So things like there must be good economic growth, because economic growth leads to employment. Employment leads to higher income, and higher income means that there's less risk of tenants defaulting.
Right.
And then location is key. We look at things like schools, what schools, universities are in close proximity. We also look at access to, let's say, transport. So in other words, how close is it to airports, to interstate, to highways, etc., etc. How close is it to hospitals? Mm-hmm. And how close is it to economic hubs? In other words, economic centers, if I can put it like that. And then, of course, we look very closely at the experience of our sponsor, but more importantly, the company that's appointed to do the property management.
Okay.
Just to give you an idea.
That's I mean, it sounds very extensive in terms of a list that you are checking off when identifying multifamily properties to put on our marketplace. We've talked a lot about the highlights of or the positives of a multifamily or residential property as an investment. Can you touch a bit on maybe some of the challenges that might be involved in investing in such a property?
Yes. Okay. So, I mean, may I just say the following, that the type of properties that we put on the platform currently is not development orientated multifamily, right? So that automatically limits or decreases the risk associated with multifamily. Right. Because if you go into developmental kind of multifamily properties, your risk becomes interest rates, banks not giving loans, properties not being sold, so you cannot get your money out. Whereas with multifamily that's occupied, the risks are much less. But just to give you an indication then, because you sit with a block with many units, management of that block can become a challenge. It's very intense, right? So the risk is that you do not have an experienced property manager, and hence they do not understand what the management of that property entails, which means that things like maintenance can skyrocket, which means that the impact on rentals become higher and your net rent become lower. That's why we do quite a lot of work on the property manager, their experience, and not only experience in multi-family and in that area. A further challenge could be, that multifamily could be very expensive to acquire. Because you're looking at 200, 300 units, it is quite expensive. And this is where the opportunity lies for investors. As a single investor, you're not going to be able, unless you're super high net worth, to be able to acquire a 200 or 300 unit apartment block. With us, in other words, through the Wealth Migrate or the Private Wealth Global or any other Global Wealth Group platforms, for as little as $1,000, you can acquire a piece of that, right? So it could be quite expensive. But one thing that we also look at is, Gabby or Gabriella, when we do the due diligence, is at what discount is this property acquired versus replacement cost? Because there's automatically a capital growth underpin for our community. And then, of course, you need to look at what other opportunities are out there. Because if you go for, let's say, an older multifamily block, clearly your competition will be the more luxurious, higher end kind of apartment block. So things like interior renovations, things like improvement of amenities, things like not a lot of supply in that area becomes so important, because suddenly you're creating a community, not only a place to live. And secondly, you make that specific multifamily property affordable for, let's say, the workforce or a workforce demographic, which we think is quite important. So I would say those are the three key risks, or challenges with multifamily. And then, of course, high vacancies, because that impact rentals. But that's why you need a proper property manager. And that's why we analyze also things like net remaining lease profiles and things like that to try and mitigate risk.
Okay. And you've touched a bit already on how our platforms or our marketplaces specifically address some of those challenges or those risks. And you touched a bit on the due diligence process that your team conducts to ensure that the sponsor of who is purchasing and developing or renovating the asset, but also the property manager who's actually managing the asset, have gone through your due diligence checks. Can you just talk a bit more about the due diligence that you do specifically for a multifamily sponsor and property manager?
Yes. Okay. So in terms of the sponsor, we are looking at things. First of all, the niche or the area of experience must be multifamily. So we're not going to go with the sponsor that previously did commercial and now suddenly they want to do multifamily. A further important point is we look at things like the team. How is the team compiled? How big is the team? But more importantly, does the team have the depth to cover the different areas associated with multifamily? Remember, we're looking at sourcing opportunities, acquiring, renovating, managing. So in other words, we need to make sure that that team can cover all these multiple disciplines involved with it. We also look at the experience of the sponsor in this area. So in other words, we don't want to go with a sponsor that's got a year track record, because that's a risk for us. We also look at track record. In other words, previous properties that they did. How does that property's return compared in terms of what they expected and what they actually realized? Also, we look at properties that went wrong. So in other words, where the outcome wasn't as expected, and why that happened, and how did they adjust their process. Because we need to try, and I'm going to use the try because investing is not risk-free, but we're trying to limit the risks of something like that happening again. And then we also look at how they manage the property manager, because that's quite important as well. So that's just a few areas that we look at. In terms of the property manager, very important, we're looking at the track record and experience of that property manager. And as I said, specifically in this asset class, and specifically in the area the property is located in, because the different areas have different dynamics. So that's quite important. We also look at the number of units they manage and their track record in terms of the number of units that they manage. And then, as I say, we look at reporting back to the sponsor so that one can identify risks or potential issues quite quickly with that property. And we also look at, let's call it resources per capita. In other words, is it at least a proper team that's looking after this property? Or is it maybe a retired gentleman that as a part-time job look at the property? You know, we don't want property managers like that. So we want a professional team that is big enough for the size of the multifamily property that we're investing in.
And it makes sense, especially if you are looking for a property manager who's going to be overseeing communities, if you will, as you mentioned earlier, especially when you are renovating an asset that is going to include new amenities, is going to include new interior finishes and features. They need to be able to have an understanding of the regional market, I imagine, and what that renter in that market is looking for in terms of just actual features in the apartment, but also amenities and community needs.
You're 100% right, you know, and those amenities are so important today, you know, that especially in the challenging times we're living in. People are staying at home. People are afraid to go out. So the amenities become so important to create that community. Mm-hmm. And that is where something like a low density property, you know, where it's not 1,000 apartments, but maybe 180 apartments becomes so important, because it gives you that garden lifestyle feeling, you know, instead of only a construction building with paving, you know, kind of thing.
Right. Can you speak to maybe what some of these amenities are now in this post-COVID age?
Yes, definitely. So some of the things that we're seeing is that this new trend of online shopping, you know, where people do not want to go to the mall. So some of the multifamily properties have partial lockers. So where a package can be delivered in your partial locker. We're looking at things like some of the higher end multifamily will have things like a gym, you know, kind of thing. Also a dog park, a barbecue area, upliftment of the pool area. So those are the typical things that we are currently seeing. So a bit more open area, relaxation, family orientated kind of areas. And it's not simply, you know, a piece of grass with a few chairs. I think that's just important for the investors to understand. It's really value adding amenities that the sponsors are actually putting in place at these multifamily properties.
Right, right. And just a final question, Riaan, where are we seeing multifamily um, really thrive in the United States? Since I know that is a focus of your team within this asset class. What are the regions or metropolitan areas that we see multifamily really performing as an asset class?
So currently, one of the so-called hotspots is Ohio, Salt Lake City. And why that's the case, you've got two airports close by, you've got an interstate close by, you've got a physical geographic limitation of area in terms of the mountain and so the mountain. You've got many schools, many hospitals, many universities around. It's called, there's lots of economic hubs around, economic centers around. So in other words, there's this natural funnel of workforce that's requiring, residential property and multifamily properties. And
Right,
just to give you an idea, Utah, for example, as a state, got population growth higher than the USA and higher than the global average. GDP, in other words, economic growth, higher than the United States and higher than the global average. Unemployment is sitting at half of the United States average. And per capita, in other words, income per person, for the state, sits at about 90% of the entire USA average.
wow.
So you've got very strong economic and fundamental drivers of Utah and Salt Lake City specifically as a county within that state.
Great. Great. That's really enlightening. Thank you so much for this run through or this overview of multifamily as an asset. And I think this is so valuable for our investor communities to be able to watch, to take in and understand, and to make more informed decisions for themselves in investing in the opportunities that we have on our marketplaces. So thank you so much for your time, Riaan, in talking us through multifamily.
Thank you, Gabriella, and thank you for the opportunity. It's always appreciated. Thank you.
Cheers.